Thank you, and welcome to, it's been a long week for those who have been following us, and I believe this is the 7th or 8th event that we're having under the Dominican Week, but my name is Máximo Vidal. I'm the president of AMCHAMDR and also the CEO for City in Dominican Republic and Haiti. So welcome to everybody. First of all, I'd like to thank our sponsors that have helped us, put this together. Frank Gutierrez from DOWS and the whole DOWS group. GFDD, FUNGLODE, the UN that has, graciously provided the venue. We did this last year and it worked very well. I just want to, and obviously thanks to our panelists are participating. Just a couple things on the capital markets and why we feel this is relevant to the mission of Semana Dominicana. The local capital markets and the relevance of the pension funds in the DR, they're on the brink of becoming a trigger for further development in the country. It now represents 10% of GDP, the pension funds. And when the private sector is able to access those funds, the impact it has on the local economy and the development of infrastructure is tremendous. Generally, the countries that are able to develop the middle class and create a strong middle class and create wealth, if you look at their banking system and the capital markets, more than 50% of the assets are medium to long term. Today, our financial system provides limited financing long term. So the local capital market is a way to really increase how we manage the growth, and it provides a very, very attractive tool for the private sector and the public sector as well to reach their goals. So again, I would like to thank you for joining us on behalf of AmCham, on behalf of Semana Dominicana, and I think we're ready to start. Thank you.
Good evening. My name is Natasha Despodovic, and I'm the Executive Director of the Global Foundation for Democracy and Development. I would like to welcome you all here on behalf of the Foundation. We are the sister institution of the Fundación Global Democracia y Desarrollo in Santo Domingo. And this event fits perfectly in what we do all year round. We try to promote the dialogue, exchange, cooperation, and progress between Dominican Republic, the United States, and the rest of the hemisphere. So again, it's a real pleasure, real honor to be part of the Dominican Week in the United States. And we would also like to acknowledge the great collaboration we've had in organizing this event with Dominicans on Wall Street, with American Chamber of Commerce, and with the Dominican Mission at the United Nations. I'd also like to acknowledge the presence of the Ambassador Brewster. Thank you so much for being with us tonight.
Good evening, everyone. Buenas noches. Thank you for coming and welcome to the 22nd edition of Semana Dominicana. My name is Francisco Gutierrez, and I'm the president of Dominicans on Wall Street. DOWS is a member-funded, nonpartisan, nonprofit organization based here in New York, whose mission is to connect Dominican professionals working in finance. At the same time, one of our key missions is to help and assist in the development of the capital markets in the Dominican Republic. We have a great panel today that will look at, that will look to continue the conversation on the growth of the Dominican capital markets, and also start taking a closer look at the evolving local investment fund landscape. And before we begin, I just want to say a few quick comments. First, we'd like to thank the Semana Dominicana Committee, AmCham, for entrusting us in hosting this panel. We've worked with them for over 10 years formally in hosting this event, and we are honored to form part of this week's activities. We'd like to thank the team from GFDD. They've been a critical part of making this event happen for the last 2 years. And through them, we'd like to thank the DR Mission Manuel Avila, and his team for inviting us again to the United Nations. Hopefully everyone enjoyed the tour of the UN. So it's not every day you can walk through the United Nations, so hopefully everyone got a good kick out of that. And we'd also like to thank the team at DOWS. This is sort of an ongoing project for us throughout the year in coming up with agendas and ideas and speakers to think about, what we want to highlight. So we want to thank, especially Cesar Perez, our secretary. He's probably outside now. But, again, it takes a team to get this organized with the team in DR, Felipe Amador, and everyone in our counterparts in the Dominican Republic. It takes a team to get this organized. So again, we want to thank everyone for their participation. Also, I want to mention quickly, this year we know that Semana Dominicana is honoring Dr. Luis Heredia Bonetti. Mr. Bonetti was the founder of Semana Dominicana. I personally got to meet him 5 or 6 years ago when I first started getting involved with DOWS. And the one thing that sort of always stood out to me was his enthusiasm, how proud and honored he was to represent the best of the Dominican Republic. So with that, we want to dedicate this panel to Dr. Luis Heredia Bonetti. Every year when we think about a topic or an agenda that we want to highlight, obviously part of the process is reaching out to our counterparts in DR to get a sense of, one, again, get a broad view of the markets, get a general sense of the continuing growth of the markets, but also looking to highlight sort of specific topics that are timely or interesting and that we want to sort of focus on. So, and this year was, talking about the local investment funds. It's an evolution. It's a complex process that requires sort of complex building blocks, if you want to put it that way. Investment funds play a critical role in the functioning of a capital market. For investors, they provide a cost-effective and efficient way to basically manage their investments. And it allows, retail, institutional, and corporate investors to, participate more directly in the growth of the markets. In a fund, considering a developing capital market and, the evolution of financial literacy, I think investment funds play even a larger role. And funds basically helps investors manage the sort of the inherent risks that you find in investing, especially in a developing market. If you think about the time and the resources that it takes to manage credit risk, diversification, liquidity, duration, or the sensitivity to interest rates, these are all thoughts that go into managing a portfolio. And obviously, in this evolving landscape, not every investor is ready to take on that challenge. So again, investment funds play a critical role there. And for the markets, and Mr. Vidal touched on it a bit, for the markets, I think investment funds allow for this pooling of savings, pooling of this growing middle class to participate in the markets, to more efficiently allocate this capital into the markets. In the developing capital market, banks and the traditional banking intermediaries play a larger role. And investment funds don't necessarily have to replace them. I think they can work in conjunction to make sure that that capital is being allocated efficiently within that market. So again, with that, I want to thank everyone for coming. I want to thank everyone for supporting DOWS, for supporting the event. And with that, I want to go ahead and introduce our speakers. I'm not sure if you guys want to come up. First, we have Phil Guarco, who's the head of fixed income strategy for the JP Morgan Private Bank. We have Felipe Amador, who is the CEO of La Bolsa de Valores, who is the local exchange. We have Rodolfo Vela from Citigroup Global Markets. We have Gabriel Tineo from BHD Fondos. We have Gabriela Canals from Pioneer Investment Funds. And Maria Isabel Perez Sargent from AFI Popular. So the idea is going to be to start off with Phil Guarco. Phil Guarco is the head of fixed income strategy for the JP Morgan Private Bank. Up until recently, he was the head of LATAM fixed income. So, we're looking to hear sort of a broad perspective into the emerging markets, with a focus in Latin America. And then we're going to jump into Rodolfo Vela, who will give us sort of a perspective into how Dominican companies are using the markets here in the U.S. to help finance their operations. And then we're going to jump into sort of the local perspective with Felipe Amador, and then jump into, have Felipe moderate a quick panel discussion between our participants from the local investment funds. So with that, thank you very much, and we'll have Phil Guarco. Thank you.
Okay.
Thank you.
Thank you. Thank you very much, Frank. What I thought I would do today would be just to give a bit of an overview on what we're looking back in terms of global growth, but also in particular emerging markets and Latin America, and maybe to draw some distinctions in how we're looking at emerging markets and talk a little bit some of the things that we like and some of the things that we don't like, and what are some of the things that make a good investment for us. Oh, pointed over there. Okay. I know bonds, but I don't know technology. One more. There we go. There we go. And and actually my last position, which just ended last month, was as the Chief Investment Officer for Latin America for the private bank. And we actually managed $8 billion of investments, not all in Latin America, actually just relatively a small part, but that money represented the actual money for our clients held with us. So what do I have here? I just wanted to put global growth up there and sort of the places where it's happening right now. And why is that? Because where global growth is happening is important, because that tells us where we're going to see growth in other places. And I think one of the big changes that we're going to see, and there's a small downturn here in terms of growth recently, but we still think it's going to accelerate compared to last year. Where growth is happening this year and where the change in growth is happening this year is different from where growth has been over the last 10 years. And what's the difference? The real change in growth that's going to happen is going to be primarily in developed markets, not emerging markets, right? And so developed markets are going to lead this recovery that we're going to see. Now, does it mean like over here that developed markets are going to outperform emerging markets? No. What's most important to us when we allocate money is the change from the previous year, because that signifies changes in expectations, but also it signifies changes in profitability at those corporations in those countries, right? So we can have emerging markets growing at significantly above developed markets, but if the trend is down in the pace of growth from what it was, that's probably not going to be good for corporate profits. But if we have a situation like Europe, where Europe actually had negative growth of -0.5% last year, and we're going to have maybe 1.5% this year, that's a huge change. And so if you go from negative to positive, that's going to be really good for the profitability in those companies in Europe, because any little bit of extra juice that they get is going to go to the bottom line. Now, there's a second derivative of that that's really important. Over the last 10 years, maybe 12 years, we've had a commodity super boom, right? Commodity prices have gone up all over the world. That's been led by China, right? China buys most of the commodities, and even if they don't buy 100% in any one place, they're the marginal buyer. They set the price of commodities. So if you're producing steel or copper, you're really dependent on China, not just because you're going to sell it to them, but because they're determining the price that it's going to be sold. We used to do that in the U.S. That's now China. So that's going to be important because China is slowing. China is a big reason why the rate of growth in emerging markets is falling, right? We think China is going to grow about 7.2% this year. That's down about 0.5% from last year. So China is coming down marginally. That's going to drag commodity producers' growth a little bit down, whereas U.S. and Europe are going up, and that's going to help whoever exports to the US and Europe, and whose economies are closely tied to that. When it comes to Latin America, just like Julius Caesar divided Gaul into 3 parts, I like to divide Latin America into 3 parts. And why am I putting Latin up here? Actually, this is my Dominican connection. So Gallia est omnis divisa in partes tres, right? Which is Belgium, the Celtic area, and Gaul. Well, we kind of divide Latin America into 3 parts. And what are those parts? There's a China-dependent part, Brazil, Peru, Chile. There is a part of Latin America that's US-dependent. That's Mexico, Central America. I would very much argue the Dominican Republic. And there's a part that's still kind of stuck in 1970s political, economic debates, never really progressed that much from that, which would be Venezuela and Argentina, where we don't invest anything in at all, and we don't really expect that much from. But why am I putting it in Latin? Because my Dominican connection is when I was 22 years old and left college, I actually taught at a school in a Dominican neighborhood in Lower Manhattan, in what we used to call back then the Lower East Side. And it was a Jesuit school. And I used to teach the Dominican kids and the Puerto Rican kids Spanish and Latin. So that's why I have the Latin up there. So if I say something to you in Latin, it's because I'm having flashbacks of my time on Forsyth Street off of Houston Street downtown. So that's how we see the world divided in Latin America. And just to show you some of the things that are going on in countries that have done the right thing, but also that are dependent on the U.S. economy, I think is a little interesting. So take Mexico. We're expecting 3 to 3.5% growth out of Mexico this year. Mexico has made a lot of structural reforms. The debt to GDP is very low. They have a strong balance sheet. There's a lot of central bank reserves. And precisely because they haven't been living off of a commodity boom, they've still retained a desire to work hard and export products that are globally competitive. So anybody ever rent a Ford Taurus? Yeah, sorry, a Ford Fusion. Or seen one, right? Nice car, right? It's one of the few American cars that are on a level of the Japanese cars. Every single one of those cars in the US and in Latin America is made in Hermosillo, Mexico. And so what's Mexico doing this year? They're going to build 2.5 to 3 million cars, and they're going to export 2 million cars. Why are they going to export 2 million cars? Because 80% of what they export goes to the US market, and they are globally competitive. So if the US is going to have maybe 1% better growth this year, that's really good for Mexico. So Mexico's taking advantage of, they've done some good things in the economy, but this is their time because it's going to be US-led growth rather than Chinese-led growth. Another interesting thing that I picked up from what Maximo was talking about, the Mexicans put in Afores, which are the pension funds, back in 2000. And actually, when I was Moody's, I wrote an article about how it would create long-term capital markets. It actually came true. It's one of the few things I got right. No, only kidding. But what did it do that was really important in Mexico? Well, when I was a young banker in 1992, 1995 in Mexico, I had to live through the tequila crisis. But the interesting thing about that period was that the bond market had a yield curve of 30 days. Mexico has a yield curve nowadays of 30 years. What did all that savings do? And I think Maximo was really hinting at that. It created long-term capital markets that were able to bring money into the economy and fund this kind of private sector growth. So, it's Mexico's time. They did their work. They're focusing on the US. That's a little bit of just good luck, but they also have the capital to keep propelling this growth. And then just some other things. Mexico exports make up a third of the gross domestic product. And one of the other interesting things that I always question could be interesting for the Dominican Republic is that one of the reasons why Mexican industrial product exports are going up so much is that they're much more competitive vis-a-vis China. In China, we've had the RMB go up and wages on the coast go up, but now we're at a situation where Mexico's wages are actually on a par with China's. So whoever competes with Chinese manufacturing acquiring products, there's kind of a window of opportunity. And that could be an opportunity perhaps for some Dominican companies that, had a rough time after 2003 when the RMB was very weak and it was very tough to combat competition from China. Now, the other part of Latin America that I will talk about, I won't talk about those marred in the 70s, is Brazil. And I think Brazil is one of those places where we've really taken a step back from investing. And why? They have been living off of a commodity boom, right? And so your exports go up automatically because the prices of soybeans and iron ore go up, right? You could just sit back, keep producing what you're producing, life is happy, and your exports are going up and your current account deficit is going down. Brazil had a great run for 10 years. Unfortunately, that's not a model that's sustainable in a way that's not going to have a lot of volatility, because Brazil looks a lot modern, but they really haven't progressed from being a commodity exporter like Latin America was in the 50s and 60s. So even though they have a lot of reserves, and they've done a good job doing that, and they have a relatively low, what did I do? Low debt to, or I didn't do that, did I? Low debt to GDP. There we go. They have a worsening current account deficit, and if you look, right, we've had a relatively strong real. Their industrial production has stagnated as their imports keep going up. That's not sustainable. So when we hear all these issues about Brazil and the riots that we've had in Brazil, is because their people are feeling that something is going on that's not terribly sustainable, and China's slowing, and 17% of Brazil's exports now go to China, right? The largest single trading partner now, and that's a huge difference from where it was just in 2005 when only about 6% went. And another thing, going back to Maximo's point, what does Brazil not have? They don't have afores, or how do you call them in the Dominican Republic? AFPs? AFPs. In Mexico, I guess they're the only ones who call it afores. They don't have AFPs, so you don't have that extra capital domestically helping to support an economy when you have ups and downs that are happening because of exports of commodities not staying where they were. I could have put Peru and Chile up here, but I didn't. And one of the reasons why is they are actually, Chile was the originator of the AFPs. And what that does is it helps them smooth out their economy in times when commodity prices get more volatile. So Brazil is the kind of the example on the bad side of being very commodity dependent, but Peru and Chile have saved more, and savings helps in these periods. And then I just wanted to talk a little bit about, not all emerging markets are equal. It's very important to keep current account balances and fiscal balances together, because if you don't fix these over the long term, and I think this is a challenge for the Dominican Republic over the long term, it's something that's going to hold back your economy. So when we look at where we want to invest or what we think is going to be volatile, there are areas where are red flags for us, like say where India, Brazil, and South Africa are, because the fiscal balance is way out of whack. And not just that it's way out of whack, they're not really growing. So if your fiscal imbalance in Brazil is in -4, and you're going to grow 1% like this year, you're moving backwards. The Dominican Republic, it's actually a little bit more stable. You're growing, we think, could grow close to 5% this year, and if your fiscal imbalance is maybe 3, it's okay. You're growing faster than your fiscal imbalance. That's much more sustainable. So it's something in terms of the Dominican Republic we'll keep an eye on, but it's not really worrying us that much right now. And with that, I guess, Frank, I'll pass it back to you for the others.
Thank you, Phil. Now we're going to jump into Rodolfo Vela from Citigroup Global Markets.
Thank you, Frank. And you think you have bad luck with technology, you haven't met me. Exits are there and there. I'm about to touch this thing. Very nice. Well, thank you very much for having me. It's always a pleasure to be with you. I became a U.S. citizen a couple of weeks ago, and I was in a room. Thank you very much. And I was in a room exactly this size, and it was very interesting because I made eye contact with one lady that was walking around. She seemed very friendly, and she smiled at me, and I smiled back at her. And I guess she felt comfortable. I don't know, something, we made a connection. We're both very excited about the whole process. And then next thing you know, she's sitting next to me, and I hear her speaking to someone over the phone, and of course I realize she's Dominican. And then she starts waving at people, and then out of the blue, it's me and maybe 150 Dominicans with me. So I really felt at home. It was quite an interesting experience. And the judge actually mentioned, that he asked how many people from Mexico have became U.S. citizens. I raised my hand, and there were 3 of us. And I was, like I said, with a lot of Dominicans. So I always feel at home when I'm with my Dominican team. So thank you very much. So we wanted to bring a quick example of a transaction we did recently for one of your corporates that definitely took advantage of a very unique situation in the Dominican Republic. I think Maximo was referring about the availability of funds in the local markets, as well as my colleague from JP Morgan, make a difference in allowing companies to make use of those sources of funds to grow and to continue with their corporate expansion projects, et cetera. So we're going to talk a little bit today about Haina, and we're going to go specifically into a transaction that involved the liability management trade that we worked on for them. Well, basically, Haina had accessed the international markets a few years ago, and it was at a time when there were not that many Dominican bonds out there. The sovereign didn't have a lot of transactions outstanding back then. And the curve was, much wider than where it is today. At the time, basically, Haina ended up paying a very high coupon, something that in the Dominican Republic is now not normal. They were paying 9.5%. And of course, they were also grossing up for withholding taxes, which carried a total cost of around 10.5%. Haina was in a very particular situation because they wanted to, be able to have some cost savings in their debt. But they also were not in a point in time where they needed a lot of cash to do a bond issuance to repay these old bonds or take them out. So there was this conundrum, what do we do? Do we go to the international markets and issue a small deal to try to pay these back, or should we try to find other sources of funds? Our advice to them was the following, once you decide to go to the international markets, you really have to be very careful about the size of the deal you make or you perform, because the smaller the deal, the more likely it is that investors are going to penalize you for lack of liquidity. We typically tend to investors tend to like transactions of a size of, say, $250 million, $300 million or above. By 300, corporates actually go into an index, which allows investors to follow and track the value of that bond. Below that, it gets a bit more complicated. So Haina, we explained that to them, and they said, well, what do we do if we don't want to access the international market? We also don't want to go down the route of a loan deal, because that's going to import now the need to pay amortizations, and that we don't want to, basically trap our cash into those amortization payments. So with Maximo and with our team in the DR, we devised a process by which we offer them access in the local market in a series of transactions that would, be small in scale, but that would be adequate actually for the size of the Dominican market and would allow them to have those savings. So basically, the transaction is very easy to explain. They wanted to buy back approximately $170 million worth of bonds. They had $70 million of cash at hand that they wanted to use for the repurchase, and they needed $100 million. So what we did basically was a bridge facility for $100 million, and the takeout for that transaction would involve issuing in the local market. Okay. The structure here is actually particularly interesting and unique in the sense that, any bank that lends money, particularly in bridge format, has to go through a very particular and very unique series of committees internally to deploy capital in that fashion. And the most important question that always comes to mind is, well, what is the takeout, and what is the certainty that the takeout will be available in order to repay the bank? As we all know, bridge facilities are not made to last for a long time. They import penalties onto the borrowers. But what happens is that typically what you'll see is that the margin will be increasing over time to ensure that the borrower actually goes ahead and takes action and moves forward with a takeout facility, whether it's a local international bond or a term loan facility. So basically, our committee was, wanted to hear from Maximo, wanted to hear from us, whether or not the technology that we use in the U.S. and in other places in Latin America, the more developed markets, would apply for the DR. And that's when we started, becoming, at least in the U.S., becoming more aware, or in the New York office, much more aware of the depth and strength of the local markets in the Dominican Republic. So basically, in our view, and the way we look at the local market, investment portfolios are basically, there is a very particular desire to expand their exposure, not just to government securities, which we know, most of the investment funds are very keen to invest on, but also in corporates. And when you look at the investment portfolio, you're going to see over here, you'll see that just 4% of all of the investment portfolio is represented by corporates. So we really believe that entities like Heine, who would prefer to fund themselves locally, they should find plenty of appetite, because they will obviously import or bring upon these, investment funds an alternative to diversify their portfolios. In general, what we have seen as well is that the concentration, I would say, of portfolios, at least are in terms of knowledge of the market, is 60% in central bank and Hacienda paper, 37% in CDs, and a very small portion in the corporations. I said 3% before, is anywhere between 3 or 4%. The process by which the securities are issued locally we know and have become much more practical, which is why we strongly believe that going forward, we will continue to impressing upon our local clients, the ability of issuing in the local market. Just to give you a sense of the terms of the securities, we got to go back and remember the Heine was paying anywhere between 10.5% for the outstanding debt, and they were able to refinance with local securities that were priced at 6%. So definitely, it brought upon a significant amount of savings to them, in the long run. And I know we have a very limited amount of time here. I wanted to talk to you a little bit about the connectivity, and I guess it plays a little bit into the conversation we had before with my colleague from JP Morgan. But in general, the Dominican Republic and how it is so interconnected to the international markets. And I wanted to show you just generally a couple of examples in how the Dominican Republic has been, the trends that the bonds go through are very much dependent, not just in news or progress or lack thereof that there may be in the Dominican economy, but also in the international marketplace. And one interesting thing that I wanted to show you was the fact that in the last 12 months, the G spread, which is basically the spread of the Dominican Republic debt over the U.S. Treasury, has compressed in 25 basis points. So it is, I think, again, in thinking about accessing the international markets, whether for the government or state-owned entities, it is a very good time. I mean, to the extent that we continue to see markets being open and having risk on for purposes of purchasing, securities from emerging markets, that combined with a compression of G spread that we see in the Dominican Republic, I mean, I hope makes everybody, more comfortable in exploring possibilities to access the international markets as well. Okay, thank you.
Thank you, Rodolfo. Now we're going to jump into Felipe Amador, who's going to give us sort of a broad view into the Dominican capital markets, and then we're going to have him moderate a quick panel between the local investment funds. So with that, Felipe Amador.
Thank you. So I guess formatting didn't work this time. So we're going to talk today about a little bit on the macroeconomic indicators of the Dominican Republic. Some of those topics were touched from Philip and Rodolfo as well. then talk about a little bit about the overview of the capital markets and where we as an exchange have been focusing the last year, especially focusing on getting more transparency in the secondary markets, which we think will help develop all the type of products in the Dominican Republic market. We've also been working a lot to actually bring new issuers to the new market, and that has been done through, and we'll talk about that more, through regulation, but also through some initiative from the private sector, and then we'll be working with the IFC as well, which I think in the next 3-4 years, that will be something to really talk about. And then also, one of our key missions is expanding, our base of retail investors. And for that, we've been continuing to pursue, training, events, and trying to get to universities and schools to promote actually the capital markets in the Dominican Republic. I think once we, and we're going to talk about that later, once we see the opportunity that we have in our market in terms of the accounts that has been established in the Dominican Republic, we have significant growth potential in the next few years. Okay, so that's transition movement. So we talked about, Phil talked about developed markets, driving the growth for the next years. We kind of agree with that. Also, Dominican Republic in the last few years has shown really some stable macroeconomic and consistent stable growth. Real GDP expanded relatively around 4.1% in 2013. And that was even despite the first quarter GDP growth that was around flat 0.1%. So we did have indeed a very strong, solid fourth quarter where the GDP growth on real terms grew approximately 7.2% in the fourth quarter of 2013. We feel like, and these are official targets as well, that GDP growth for 2014 it's expected to be around 4.5% and 5% for this year, pretty much driven by mining, which is currently expected to continue to fire on all cylinders and promote more growth, tourism, construction, agriculture as well. From an inflation perspective, annual inflation came around flat last year compared to the prior year, around 3.9%, which is a tad lower than the 5% expected from official last year. This year is expected to be around 4.5%, pretty much bolstered by strong domestic demand, and it also is in line with official targets from the central bank. So we have had a very stable, even though, and we're going to talk about what happened in 2013, in the first half of the year, given the measures that we had a very difficult start of the year, given the reforms, the tax reforms that we did in the end of 2012, the economy showed in the first quarter pretty much stagnated growth. For that, central bank and fiscal policymakers decided to pursue a more expansionary measures to promote growth in the Dominican Republic in the local markets. That went on for 3 months, and then central bank regulators saw that actually inflation year to date at that time around August was around 6%. So they were quite concerned about depreciation of the currency that actually translates directly into inflation. So they decided to actually go the other way around and raise interest rates around 200 basis points. So to talk about foreign exchange, this is very important for us, and this is even though the central bank has an inflationary target metric on a yearly basis, one key factor that translates into inflation is really depreciation of the currency. And I think it was the year ended around 5.6% depreciation against the U.S. dollars, and that compared favorably to other countries in the region where the currency had at least high single-digit or double-digit depreciation. In the case of Argentina and Venezuela, that was around 32% and 25% respectively. So. But however, this came as a factor of central bank taking measures in August of raising 200 basis point interest rates in order to kind of like prevent more volatile foreign exchange. So we see that, for the first time since April 2011, the central bank hiked monetary policy rates 200 basis points to 6.25. It was the largest increase since it was first established in 2008. Pretty much driven by the perceived need to reduce volatility in the foreign exchange rate. And it has been like that at 6.25 ever since they actually raised 200 basis points. So I think one important topic to talk about was the last international placement that we did. We talked about maturity of the bonds. Recently, the Treasury issued in the U.S. market $1.25 billion bond deal. It was 2.5 over subscription. It was like 7.5, but I think it was placed at above par, so the yield around 7 3/8. So it was, in today I think it's actually trading at 7.25. So it's actually a great indication from risk perspective that our country can actually go out to international markets and issue, fixed interest rate bonds at 30 years maturity. It was the first time. The last time that they did that, they did a local issuance for 15 years. So we went, as Philip was mentioning, how in Mexico 10, 20 years ago, with 30 days, the yield curve, we actually went through the same process and experience when we were 10, 15 years ago, looking at 120 days maximum, and we now have a bond trading at 30 years out, which is a great indication for a country perspective. To talk about snapshot on the capital markets locally, we have roughly 17 corporate issuers offering fixed income instruments, and we have one closed-end fund trading for the first time last year. And we're going to talk about that in the panel. It's the Pioneer United Renta Fija. So it's great to have the first semi-quasi-equity product in the market. We have experienced significant growth in terms of securities under custody. We have over 600 billion in custody in the Sebaldon, which is roughly 14 billion. On the brokerage account, and we're going to see that later, it's been growing. It's growing steadily and great, but still little compared to the active population. We're talking about 20,000 accounts, over 20,000 accounts. And one of the key roles that we're pursuing in the exchange is how we can find, with the regulator and the policymakers, a way to find triggers or catalysts that will actually increase the base of investors in the Dominican Republic. And I think the lack of products for the retail market, because usually bonds are trading on an institutional level, has not helped develop the culture of actual retail investors coming into the market. We have 15 brokerage firms authorized to operate in the exchange. We have one more pretty much coming soon online, and I think there's another couple of them that are in the approval process with the SEC there. So people are seeing a very attractive market to come in and participate, not just from the fixed income perspective, but for the potential that we see in the closed-end funds and open-ended funds, which I think is going to be an important vehicle to develop capital markets in the next few years in the Dominican Republic. We have around 8 investment funds registered and approved, and 30 years has been the longest node in the yield curve that we have, and that was very recently issued by the Treasury, and that was a great news for us. In terms of the demand side, we talked about the pension funds, roughly $5 billion in asset under management, almost 10% of GDP, like Maximo mentioned, and still growing at 30% a year. And that growth is expected to continue for the next, call it 7 to 8 years till the first redemptions start happening. So it's a big source of demand for new instruments and new products. And here is where, there was a chart that was mentioned about 60% is invested in government bonds, and then the rest is probably invested in commercial banks or other financial institutions. The thing is that these funds are growing so fast that it's taking a lot for the government to keep up with that pace. So now they're in really need, in order to prevent the returns to fall down, they're actually they're actually in need of finding new vehicles and seeking that alpha. So I think for those potential local issuers, and this is something that we're preaching to the local issuers, this is a great opportunity where you have actually the demand on the other side waiting for you to actually take the product. Now, there's been several, and we're going to discuss about this in the next steps of our market. We need to work closely with the regulator, especially the regulator from the pension funds, to allow them to actually invest in these vehicles. I will agree that the EHINA process was a great outcome, and the regulator there actually, participated very positively in the process, and that's a great sign. And because usually, like they mentioned before, they were not really. They didn't like much the electricity sector. So now the fact that EHINA was able to achieve this, and you can see some flexibility from the regulator perspective, we feel that this is a great step in realizing that we actually need to be more flexible in the type of product that we approve for the pension funds to buy in. And I think that's going to evolve not just into local issuers, but also into new instruments like REITs, other type of investment funds that will come to market, and that will be a great catalyst for real sectors to actually get funded and get capital to growth. And I think, at the end, you don't have economic and development growth if you don't have a strong capital market. And then from a retail perspective, we mentioned that we're looking for catalysts. It's been growing, and it's amazing that in 20,000 accounts we have over 600 billion in custody. Pesos, but we do need to promote more the retail participation in our markets, and that's something where we're working with the regulator to find catalysts or solutions that will help, not overnight, but help produce a quick change or dramatic change in the behavior of our investors. These are the local issuers that we mentioned about. In terms of issuers, we continue to see a concentration in financial sector. And that's, even though that's, I think it's typical in growing capital markets to see that the financial sector, which is already regulated and participate on and have like a corporate governance and a bunch of requirements already in place, that they actually see the capital markets as a very viable alternative for long-term financing for their growth strategies. Out of the 18 issuers, we have 17 on the fixed income side, like I mentioned, and one close end, which is Pioneer, right there in the middle. In terms of secondary market, and this is something that we're the change we're taking, really keen interest in trying to develop a more vibrant and liquid market. The primary market, we discussed about it. We saw 8 issuers coming to market in 2013, even though the amount raised was lower than the prior year. If you compare, not a single security represented more than 25% of the total issuers. So it means that more people actually went to the market and raised capital, compared to 2012, where we have one issuer represented more than 50% of the total issuing volume. And we have our first closed-end fund in the local market with a great issuance as well. In the secondary market, and this is something very important to us, we grew in the exchange around 140%, and almost 200 if you think all the total in trading volume. And the total market, which we have the local exchange, and we have the OTC market. The total market grew around 20%, 22%. So it means that we, as an exchange, and the transparency that we promote, we gain market share significantly. We went from roughly 8% in 2012 market share to roughly 30%. And that was accomplished by a couple of things. One, we gained the market makers program, with the rules and negotiation tactics of the exchange. And also, we established certain rules of negotiation at the late 2012 that actually pan out in flexible regulation and more regulation towards transparency and liquidity in the exchange market. Also, I think here it's important that that we talk about. In the secondary market, we realize that the lack of transparency, even though we're 30% of the market, there's 70% out there that doesn't have post-trade or pre-trade transparency, and that's something that we're really keen on focusing on, trying to get pre-trade and post-trade transparency, and we're working through the regulator to find solutions where the OTC market, especially the cash spot market, actually gets a post-trade transparency in a very limited time, and that will actually promote more confidence in our local markets. In terms of what we're seeing in currencies and sector, as we mentioned, and it's very consistent with the amount of paper issued in the market, government paper is actually the most highly traded paper in the Dominican Republic, representing almost 99% of the volume that we had last year in the secondary market. One interesting switch and shift that we're seeing is that now the Treasury bonds accounts for almost half of the total volume traded in the exchange, and that's pretty impressive. I mean, that has been great because it's proven that the market makers program that they established in place when we worked with them in 2012 and 13 is actually resulting in great transparency, and investors are actually seeing that and appreciating that and actually trading more of that security. So we're seeing that shift. Still, central bank has much more outstanding paper out there, but the trading volume has been shifting to treasuries. And then in terms of currency, around 10% has been in US dollar, and if you factor the fact that only 1% or 2% have been corporate, means that there's one paper in US dollar that's traded around 9.8%. And that's the only US dollar paper that we have from a government perspective, SEDE. And that paper has been extremely liquid and in our markets. And finally, next for us, I think we see a recovery in the U.S. I think we see a recovery in Europe and the rest of the world. I think we need stable macroeconomic outlook. I think our current deficit coming down from the levels that we had in 2012 is a great indication, and hopefully, help promote a more stable growth in the next future. So we need a stable macroeconomic outlook in order for the capital markets to continue to evolve the way it's been doing. We need new financial products and vehicles in the Dominican Republic, Law 18911, and we're here tonight to talk about this panel about the investment funds and securitization vehicles. I think, that law or the regulation for that law that happened in late 2012 is now getting a lot of traction, and we hope to see in 2014 a lot of the funds coming into the market, in 2015 also as well. We had a great conversation with Central Bank tonight where the superintendente from Peru, Lilian Roca, she was presenting, how Peru dealt with, investment vehicles and funds and how they actually promote retail investing and growth, et cetera. And then we gathered with the central bank regulators and the Treasury Department, and they were like, we need to actually help promote and be more flexible in how we approach the creation of the new funds, and that's actually hopefully a great attitude that we could potentially see in the near term. We have been working in assisting develop the local equity issuance market, and we developed a program in the exchange called RD Bursátil. And the whole purpose of the program is we partner with the IFC to find a way that we can actually bring companies into the program and help them get financing through the market. And even if they don't really know that they want to come to the market, the whole process with the IFC is that at least we give them a diagnostics on corporate governance. And most of the companies, even though they're not quite sure they want to go to market, they're really interested in finding out how they are in terms of corporate governance. And that's the first step, or one of the first key steps in order to go to market. And we had a program, we launched the program at the end of 2013. We have two 2 companies registered into the program, and we have another 2 actually coming very soon as well. So we hope that this program, even though it doesn't translate right away into issuance, it helps promote the benefits and help them get ready for potential issuance in the market. Definitely, we're exploring. I mean, as long as we progress and get more transparency in the secondary market, and we have a yield curve that makes sense, and we have price discovery process that makes sense and is efficient, we think we'll be ready in order to start creating some plain vanilla derivatives on the fixed income side. And we're still working, even though 30% of the total market is still a long way to have more transparency on price discovery process. We feel that we're actually making significant progress on the spot cash market on the fixed income side, and that we can actually be ready to provide certain contracts that make sense to the market. Securitization products, I think that's going to be a key item as well in the Dominican Republic. Listing of foreign securities was submitted to the regulator, regulation proposed from us to register securities, foreign securities in the Dominican Republic that would allow investor to buy foreign securities in the Dominican Republic. Sebaldon has already in place agreement with Clearstream and other CCP houses around the world. So we feel that if the regulator becomes more flexible around this topic, we'll be able to actually pursue a more significant basket of products for local investors. And then something really critical that is happening this year is we've been working over the last year and a half in a new securities market law. And that's expected to be reviewed by the private sector, hopefully in the next week or so, with the intention to submit it to Congress end of this year. And that's been a process also where the World Bank has been very involved also in assisting the regulator on what will be the best international practice in order to have a really great and best securities market law that help promote the market. So that's something that is coming to the pipeline. I think we will have to be very interested and pay really close attention to what's coming out of that securities market law, because that I think is going to define what's going to be in the market or the structure of the market for the next decade, and we have to get it right. So that's it. Thank you so much, and I appreciate your time. Yeah, that's fine. No, I think I'll sit. Yeah, that's fine.
Thank you, Felipe. So the idea was to, instead of having each of the investment funds sort of discuss their own specific decks or ideas, I think the idea was to have Felipe moderate a panel between the local investment funds and sort of try to get a perspective on the changes and the evolution of that market. So I think the idea now will be for Felipe to moderate the panel, and I think because of time, we're going to ask for sort of the general Q&A to move towards the back, where we'll have sort of a quick cocktail. So with that, we'll let Felipe go ahead and ask questions of the local investment funds. Thank you.
Thanks. So to start, I think people here at the podium have been introduced. And the whole idea of the panel is to give a quick flavor about what's happening in the Dominican Republic on the investment fund side. There has been a lot of activity in this specific asset class or vehicle, and I think it's important, for all of us to understand where it's heading, what's happening, who is out there, and what do we think are the possibilities for a local market for the use of these vehicles. And first and foremost, I think since we already have one closed-end fund trading in Dominican Republic, and it was actually the first one to be launched and went through a whole long process in order to get ready, in order to be out there, I think the first question will go to Gabriela from Pioneer to tell us a little bit more about key learned lessons about the Pioneer Renta Fija investment fund, and what she thinks was the key key experiences that help that fund get ready and actually be placed in the market.
Well, good evening, everyone. My name is Gabriela Canals, and I'm representing Pioneer Investment Fund's Administradora de Fondos de Inversión. And first and foremost, I would like to thank you for the invitation. It is an honor for me to be in your presence and also alongside my esteemed colleagues. So answering Felipe's question, a little background on who we are. We have the first fund in the Dominican securities market. It is a closed-end fund, and the main investment objective is the government debt securities, Banco Central and Ministerio de Hacienda, in the most part. And it has a maturity of 5 years. It is about to turn 1, so we'll be probably cutting a cake in its honor soon. And the fund is currently performance is 16% total net. And going back to your question, it was a long process, and basically it was because of the learning curve with the regulator especially. It is a new vehicle for everyone, and thus we had a lot of obstacles in terms of how it was going to work. The law frame, with the as Felipe was mentioning, with the new law and the new bylaws, really helped, as it set the standards on how everything was going to work. But it was also issues in terms of registration, because once it was approved by the Superintendencia de Valores, there was a whole process on how to have the fund as a company, el RNC, el registro mercantil, and so forth. So it was definitely a struggle, but the fund is currently working perfectly. And we are very happy because we paved the way. And we're certain that now the process is much easier. We have a second fund that was approved. It's real estate investment fund. And there's also another fund that has also been approved by Banco BHD, which is a mutual fund. And the process was much faster for those two. So we're sure that as time evolves and there is more knowledge of the instruments, things are going to become much easier for us and the rest of the players.
Thank you, excellent. And then if we talk on, and I'm going to address this question to Marisabel, and if we think about the type of products that we're expected to see in the short and medium term for this type of funds, given the regulation that we have today, what do you think those are? What type of assets you think those funds can hold, and any limitation that you see that we need to work from a regulation perspective?
Well, thank you, everyone. Good night. My name is Maria Isabel. I'm representing AFI Popular, the administrator of Grupo Popular. Thank you, DOWS. Thank you, Bolsa de Valores, for inviting us. Really, our expectations are really high on the investment funds market. We have a new market. Everything is there to be done. We believe that in the short term, we will have more closed-end funds. Due to the limits on the regulation that we have now, we can only invest in Dominican Republic's products, Banco Central, treasuries, and private issues. So we don't have too many material to create a lot of investment funds financial. But there are a lot of real estate projects that can be financed, or the developers can get money from investment funds. So this is a new way for Dominicans to invest in real estate. You know, the typical Dominican invests in real estate like it's part of their culture, of our culture. And we believe that this new product is gonna get more people to get to know the capital markets and do what they usually do with their savings, and to invest in real estate through the investment funds. We also believe that the markets in the close term will develop, we'll see more mutual funds by the hands of financial institutions like BHD, like Popular, because it's our natural business. It's to get people that usually save a few bucks, to get them to know the capital markets through another product another different product that gives gives them a little higher income than what they're used to get in savings accounts and CDs, and it's a product that's offered to them through the through the AFIs, the administrators of investment funds that they usually know through their bankers, through their relationships with the banks.
Anyone, you want to comment on it?
Well, yes, I would like to add a little bit maybe about the type of products that maybe we can see, but first I'll introduce myself. My name is Gabriel Tineo from BHD Fondos. BHD Fondos is an asset management company from the BHD Leon Financial Group. We have been approved by the Superintendency of Securities, la Superintendencia de Valores de la República Dominicana, to operate in the market, and we have been approved also the first mutual fund in the Dominican Republic, which will launch probably in a few weeks, hopefully. On our view of the market, we also see that not only we will see funds being created and a structure that will invest in like monetary funds or real estate funds. We also think like the investment funds will be a vehicle to direct investment to other part of the economy that help develop the country, like infrastructure, the energy sector, probably tourism also. That's how we see it in the short, medium term. Those are the parts of the economy that the World Bank has signaled as critical to our development and with high potential of growth. So we can see maybe private equity and different kind of capitals going through the market through this type of vehicle. That's how we see it also.
Yeah. I would like to add a couple of things that we are at Exchange are working with the regulator on this specific topic. There's a big push from a government perspective on pymes and how we can get them actually to get funding through the capital markets. And there has been a lot of talk about creating a second market, like Peru, like Argentina, like many other countries. But the problem with those markets, well, not the problem, the reason why it has been successful in some of those countries is that they have a primary market that works and that is actually liquid or deep, and they learned for many years about that and how they can actually take that knowledge and apply that to less, smaller companies as well. We don't have that. We're developing our primary market from an equity perspective, so we really need to make a big push from a regulation perspective on that side before, I think, entering into a second market. However, there are products from a fund perspective that I think will be extremely helpful for pymes, like, for example, the guarantee funds. Guarantee funds that, pymes, when they get screened, they get approved, and they get a guarantee for 50% of their capital needs, they can actually go to the bank with that guarantee and actually get access from a local commercial bank at really good interest rate that perhaps before they couldn't. And this is a product that in Bolivia, Salvador, and many other countries have worked pretty well. So we really focus on trying to see how these guarantee funds can get started in Dominican Republic for pymes. We're also exploring opportunities similar to those found in Mexico. They're called CKDs, which is Capital de Desarrollo, Certificado de Capital de Desarrollo, which is pretty much private equity funds that somehow got put up in this special vehicle, and the pension fund system can actually invest directly in these type of vehicles. And even though we don't have private equity in the Dominican Republic per se, we found that this could be a really interesting opportunity for those companies that, they want capital, they are still afraid of going, into a public offering for common stock, that actually they can do this type of vehicle and structures and get funded. I think that's something that we're promoting heavily from the exchange. We're working with the regulator to find out what will be this sort of hybrid funds that we can create and promote in the Dominican Republic as an alternative for the typical common equity offering. So I think that's another product that we potentially can see in the Dominican Republic as well. And then also mortgage securitization. I think securitization is definitely a topic. I mean, we have to find out when the banks are going to get all in agreement and pursue this, because we need that generation of mortgages in order for these type of vehicles to work. And we have Títulos a la Dominicana in Dominican Republic, but still not actually producing any type of securities right now. So we hope that also come to market, and that's going to be a massive impact in Dominican Republic, not just from the creation of new securities, but also will allow banks to offer long-term rates financing for mortgages. And that's the start of it, right? I think that's going to be great for the Dominican Republic. So those, I think are 3 or 4 things that we're also working from a regulation perspective. And then, talking to Gabriel about more about who the potential target will be. I mean, we have 20,000 accounts, right? We have little penetration from a retail perspective. What are the efforts being made to promote these type of vehicles? How do you envision that the retail investor will embrace this product, and what do you think are the key items that this new investor will look for in these type of companies?
Well, I think that the first thing is the lack of financial education that we currently have in the Dominican market. It is something that it is a flaw, and that we as the players of the market are trying to change. Well, we believe that it is mainly ignorance. That's why they're afraid of it, because they simply don't know it. And I think that it is crucial for us as players, as well as the regulators, to really put our effort in terms of telling the people what it is and how it can help them. Investment funds is the perfect vehicle for the retail investor, as it is a way for them to participate in investment opportunities that in the past have only been available for big institutional players. And our funds have a minimum investment of 1,000 pesos. So it is a way for them to really have access to investment opportunities such as real estate, such as private equity, that are very interesting, are very lucrative, and that are for the people.
Yep.
So I think that's the key.
Okay, thanks. Go ahead, Gabriel.
Well, we believe.
Nope.
Sorry. We believe like still closed-end funds will not be reachable for every Dominican, as they have to open an account, and so far in 14 years that we have a securities law, there's only 20,000 accounts, investment accounts. Well, they have grown exponentially in the last 2 or 3 years. That's good to say also, but it's still not enough. So, and closed-end funds under the Dominican regulations can only be traded. That needs to be traded in the stock exchange, and you need to have an investment account through a brokerage firm to get access to a closed-end investment fund. On the opposite side, and that's part of our strategy, I can say that on the mutual funds, anyone can invest. Any Dominican, any foreign resident in the Dominican Republic can invest in a mutual fund, because you go directly to the asset manager for liquidity of your participation in the fund. So in that term, and also that the minimum quote to access is 1,000 pesos, which is around $25. We are putting a lot of effort in this financial education through the securities superintendency, and also from our institution, to get a product for the whole type of investors, and try to induce them, and to try to educate them that there's a savings and investment collective vehicle that can give them and can provide them access to the capital markets, and can give them liquidity. Our mutual fund, which is the first one approved in the DR, will invest, and the investment policy is to invest in securities that are already approved in the superintendency, low risk, government issuance, central bank, some corporates that are rated above A, investment grade, more than investment grade, and certificates of deposit of banks also of high, very good rating. So through that vehicle, like anyone can access the market. We still have to work with the regulators because a simple plain vanilla product like that took almost 9 months to get approved. The previous fund, which is a closed-end fund, took 1 whole year, 12 months. We have lowered a little bit the time to enter the market, but it's still long, no?
Yeah, I think, if I might add, the whole approval process is definitely a learning process, right? It's a new product, and not just from our SEC, but even from monetary policy makers. You know, it's definitely a new vehicle that is reaching out for capital and investing the money. So I think, you know, despite that it's been a learning curve, they've been really cautious about the process. And the fact that they're being more educated and dedicating more of their staff to being more educated about these products and getting advice from the U.S. Treasury on the Treasury, on our local Hacienda side. I think once we get this type of advice and type of feedback and we start getting more comfortable with this type of vehicle, I think we're going to see a ramp up in this type of structures as well. And talking about long-term process for approval as one hurdle in order to go to market, what do you think, besides that, obviously, which is a big factor, what do you think are going to be, what needs to happen in order to make these vehicles and products more available to retail investors? You mentioned something that is actually quite interesting, that you're not allowed to invest outside Dominican Republic. And that's something that, you know, even we're drafting a new securities market law, we're working heavily to make sure that that these funds actually have ways to actually go out to the market and invest. So what do you think needs to happen from a regulatory perspective and from a market structure perspective for this to work?
Well, one thing is like that we are working on is to, with the regulators, to open up a little bit the distribution side of the product, like other entities, other financial advisors certified can sell and can offer to their clients investment funds. Currently, only the asset managers and the stock brokerage firm can sell investment funds, like investment banks or commercial banks cannot do it. So that's put a hurdle in the reach where investment funds can get. No, is to duplicate a distribution channel will be very difficult to do it, and create your own as an asset manager also is very difficult or it's not cost efficient, right? So that's one of the things that we are trying to work with. Also is the limitation today to invest in foreign investments through the investment funds. We don't pretend to have to get from approvals of an investment fund, like we have a law for 2 or 3 years now to get a product that only invests in the U.S., let's say in the U.S. stocks, but like at least to have a mixed product that can invest a little bit in it and can help also the IFPs, the pension funds, to have a diversification of their investment assets, right? And today there's no limitation, and that the government has to understand that today. And probably my Dominican colleagues that work in investment banks please excuse me, but any investment banker from a big firm can go to the DR, talk to 100 families and get a very big account from them, and there's no limit in the DR limitation for that. So there's a lot of Dominican capital that's getting out of the country through other type of products below the radar of the regulators and the central bank, which is the one that is a little bit cautious about getting foreign, the currency movement with the exit of capital. But through a local asset manager or investment firm, everything will be regulated. Like, they will see everything. They will see. We will be completely transparent. They can see which Dominican is investing in U.S. investment products or in foreign exchange. Completely regulated. So if they will look into it, they will see that this is a vehicle that will allow them to have a transparent in the tax component and also on the foreign investment component. So that's part of our discussions with the regulators.
I'd like to add.
Yeah, I want to add to what Gabriel was saying. Besides that, we're working with the tax authorities. We want to arrange a few things in the tax regulation regarding funds to make them more tax efficient. And we will soon have conversations with both parties, our regulator, the superintendency, and the DGI, the tax authorities, in order to make some changes in the regulation considering the tax on transferring real estate, the tax that's applied to debits on accounts, and some taxes applied to our services, so we can make more efficient funds and pass that efficiency to our clients.
I think that
Sorry, to add something to what Marisabel is saying, like one advantage in the DR for investing in investment funds is the tax rate in DR. For example, the corporate rate is 28% this year, and if a company invests in the securities market, they will have an income rate and income tax of 28%. If they invest in the same security through an investment fund, they will have a 10% tax rate. So it's a huge advantage and difference investing through an investment fund.
Yeah.
so.
Yeah, I would also like to add that, as he was mentioning, there's a 10% only withholding from the company, and that would apply because it is as a dividend. So it would be the 28 plus the 10 as a normal security, as a normal investment. Through the fund, it's only the 10 and 10%, so it is a very nice tax benefit for investment funds.
And I think just to wrap up, and just to appreciate the panelists for being here tonight, it's quite clear that, the way I see it, the investment fund market in the Dominican Republic is in the initial phases and is going to grow pretty fast. But we need the regulators to support this type of growth. We need the regulators to support them, not just from flexibility on the type of assets that the fund can invest, but also to promote certain tax incentive for these vehicles to actually get traction in the Dominican Republic. And I think as part of the new securities market law that we're going to potentially put in place in the private sector in the next few weeks, we're definitely working with the tax agency to try to make sure that we have a benefit to the capital market in order to promote this type of interaction between investors and issuers. With that, I would like to thank AMCHAMDR for inviting us tonight here, to DOWS as well, to always inviting us to this event. And we would like to open up, Frank, I think we can open up for questions to the audience, or
Thank you, Felipe. I think due to time, we're going to move the Q&A over to the cocktail. Gerardo Herrera, I'm not sure, or I guess on behalf of DOWS, AMCHAM, GFDD, the Semana Dominicana committee, I think first we want to thank the panelists. I think as we've seen, this is sort of an ongoing conversation that needs to happen. A few years ago, we talked about the mortgage trust market This year, we're highlighting the investment funds. And I think, as a couple of panelists and Felipe has mentioned, it's going to take sort of, catalysts or incentives and structural changes to make sure that the market advances. So with that, again, thank you very much, everyone, for coming. And there's going to be a quick cocktail in the back, so feel free to reach out to our panelists. Feel free to, make any questions that you feel you have pertinent. So again, due to time, we'll ask that we move to the back and enjoy a cocktail. So again, thank you very much for attending, and hopefully we'll see you again next year. Thank you very much.